Ladies and gentlemen, once again, good morning. I'm liking the energy in the room. And also outside there, I would like to encourage us to continue settling down as we take a cup of coffee and enjoy our breakfast. As you get to know who is on your table, if you can make new acquaintances, it's also good. And as you also get to catch up with colleagues in the industry. Please settle in. I would kindly request our guests who are outside, kindly if you could continue making your way into the hall as we continue to enjoy our breakfast. Our official program is just about to start, so I'll encourage us all to step into the hall. Karibuni sana.
For biashara. Are you an SME looking to elevate your business to new heights? Look no further. At Family Bank, we're not just a bank, we're your partner for growth and success. Enjoy the convenience of our comprehensive trade finance solutions tailored specially for businesses like yours. From stock financing to invoice discounting, LPO financing to CDF solutions.
We have walked a long
Import
journey
duty
with
fi-
Family Bank since the inception. Since the first day it opened, I became a customer. And since that day, we have walked a long, long journey with Family Bank. The first loan I got was for Biashara Boost, and that loan was only 40,000. And at those days, we did not have collateral, so it was so difficult. And we progressed like that, and I think I got a second loan of 80,000, and then 100, and then 120. And when we got 120, it's like, wow, we were surprised. I think we could get such a large amount of money those days. We continued to build the school together with the bank. Many times is when we found that we don't have any money to pay the teachers, the workers, and every time we went to Family Bank, the bank was so lenient, the bank was so understanding, and they provided the funds, the finance that was required. We bought our first bus, a KCB 027Y. It was an Isuzu FRR, and since that time, I ran my business. Because were it not for Family Bank, I could not have been where I am. We have walked a long journey with Family Bank since the inception. Since the first day it opened, I became a customer. And since that day, we have walked a long, long journey with Family Bank. The first loan I got was for Biashara Boost, and that loan was only 40,000. And at those days, we did not have collateral, so it was so difficult. And we progressed like that, and I think I got a second loan of 80,000, and then 100, and then 120. And when we got 120, it's like, wow, we were surprised. I think we could get such a large amount of money those days. We continued to build the school together with the bank. Many times is when we found that we don't have any money to pay the teachers, the workers, and every time we went to Family Bank, the bank was so lenient, the bank was so understanding, and they provided the funds, the finance that was required. We bought our first bus, a KCB 027Y. It was an Isuzu FRR, and since that time, up to this day, the bus is still serving the children. And after that bus, Of course, there's who have acquired other buses. I think we have a total of 8. And I think out of the 8, about 5 have been financed by Family Bank. This is not a bank just like any other bank to me. It's a bank that means so much to me at my life, at my family, and my business. Because were it not for Family Bank, I could not have been where I am. We have walked a long journey with the Family Bank since the inception. Since the first day it opened, I became a customer. And since that day, we have walked a long, long journey with Family Bank. The first loan I got was for Biashara Boost, and that loan was only 40,000. And at those days, we did not have collateral, so it was so difficult. And we progressed like that, and I think I got a second loan of 80,000, and then 100, and then 120. And when we got 120, it's like, wow, we were surprised. I think we could get such a large amount of money those days. We continued to build the school together with the bank. Many times is when we found that we don't have any money to pay the teachers, the workers, and every time we went to Family Bank, the bank was so lenient, the bank was so understanding, and they provided the funds, the finance that was required. We bought our first bus, a KCB 027Y. It was an Isuzu FRR, and since that time up to this day, the bus is still serving the children. And after that bus, of course, there is who have acquired other buses. I think we have a total of 8. And I think out of the 8, about 5 have been financed by Family Bank. This is not a bank just like any other bank to me. It's a bank that means so much to me at my life, at my family, and my business. Because were it not for Family Bank, I could not have been where I am. We have walked a long journey with Family Bank since the inception. Since the first day it opened, I became a customer. And since that day, we have walked a long, long journey with Family Bank. The first loan I got was for Biashara Boost, and that loan was only 40,000. And at those days, we did not have collateral, so it was so difficult. And we progressed like that, and I think I got a second loan of 80,000, and then 100, and then 120. And when we got 120, it's like, wow, we were surprised. I think we could get such a large amount of money those days. We continued to build the school together with the bank. Many times is when we found that we don't have any money to pay the teachers, the workers, and every time we went to Family Bank, the bank was so lenient, the bank was so understanding, and they provided the funds, the finance that was required. We bought our first bus, a KCB 027Y. It was an Isuzu FRR, and since that time up to this day, the bus is still serving the children. And after that bus, of course, there is who have acquired other buses. I think we have a total of 8. And I think out of the 8, about 5 have been financed by Family Bank. This is not a bank just like any other bank to me. It's a bank that means so much to me at my life, at my family, and my business. Because were it not for Family Bank, I could not have been where I am. have walked a long journey with the Family Bank since the inception. Since the first day it opened, I became a customer. And since that day, we have walked a long, long journey with Family Bank. The first loan I got was for Biashara Boost, and that loan was only 40,000. And at those days, we did not have collateral, so it was so difficult. And we progressed like that, and I think I got a second loan of 80,000, and then 100, and then 120. And when we got 120, it's like, wow, we were surprised. I think
The energy in the room is wonderful. But in the next few seconds, we are starting this program, and we are delighted to see each and every one of us here. For introduction purposes, my name is John Kinyanjui from Family Bank, and I'm delighted indeed to be your program host this morning for Family Bank Quarter 3 Investor Briefing 2025. We are always delighted whenever you find time to join us, and so I'd like to encourage those of us who are still outside, if you could still please make your way to the hall. And as we do that, as you settle in, just a few notes to take on amenities, just for our restrooms. If you can see how the hall is, there's a back door just right behind the hall. So if you need to access the restrooms, as soon as you're outside, there is a staircase just to your left. You can go up. The restrooms are on first floor, so that's one option. But you could also decide to walk out through the main entrance how we came, and just go back to the main entrance lobby, and there are washrooms there. So you could use either of that. So please feel welcome. The other thing is that please note that refreshments will continue to be served throughout this morning. So feel free at any time to refill your cup of coffee or tea and continue indulging with breakfast. And of course, as the program wears on, if you require any assistance, please feel free. We have a couple of hotel attendants who are willing to assist us. But of course, also, we do have Family Bank staff, and you can easily locate them from where they are, and feel free to inquire from them of any assistance that you may require. Indeed, we just want to thank you again this morning, and as we continue to thank all the investors, all the shareholders, all the partners, and also the media for really partnering with us and always being a part of our story, the story that Family Bank is writing. But before we do that, we have a tradition as Family Bank. We do like inviting God in all our plans. And so I would like us to just be attentive and you join me as we do a prayer this morning as a way of also acknowledging God's presence in this room and also with our session. So please, if you may indulge me, let's have a word of prayer. Heavenly Father, we come before you this morning with grateful hearts. We thank you for the gift of this day and bringing us together safely for this important briefing. We pray for wisdom, clarity, and unity of purpose as we review our progress and chart the way forward. Bless our leadership, our stakeholders, and every person present here today. May today's discussions be fruitful, insightful, and guided by integrity and excellence. We ask for your grace over our work, our organization, and the people we serve. In Jesus' name we pray. Thank you. Thank you for joining me in that prayer. We thank God for that, and we are delighted indeed for this moment. Once again, we are delighted that you honored our request that you may join us this morning. And just in case you're wondering, what are we going to be about and how is this session going to be today? I just want to make one promise, and maybe you can hold us account at the end of this session. And the promise we want to make for today's briefing is that today's briefing will be like your favorite bank statement. A bank statement that is clear, transparent, and also showing a positive balance. So please hold us to account even as we continue to interact with you. To usher us into the next step, allow me to welcome our Chief Executive Officer and MD, Madam Nancy, to welcome us officially and, of course, set the tone for the day, as well as to make introductory remarks. Please, a round of applause as we welcome Madam Nancy.
All right, thank you very much, JK. Good morning, everyone. Good morning once again. Yeah, it's a beautiful day that we've gathered here this morning, and it's a celebration moment. I want you to turn to your neighbor. Maybe you're here and somebody has not shaken your hand. Kindly shake the hand of your neighbor and tell them, welcome to this great family of Family Bank. Yes, this is a great family of Family Bank. I can see there are some of us who are not welcoming their neighbors. Please welcome your neighbor. The other neighbor? Yes, indeed, it's a beautiful morning. And as the program's director has said, we gather here to celebrate a success story of this great institution, Family Bank. So for us to be here to release the Q3 results actually is a testament of how this great institution is faring going forward. So allow me to really welcome all of us in this great event. And thank you so much for honoring our invitation. Thank you for coming. We have our shareholders with us and we appreciate them. So let's give a clap to our shareholders who are here. Thank you for trusting management and investing in this, including other investors who are here. We appreciate your presence this morning. We have our partners who have also walked this journey with us. We want to appreciate you and also to welcome you to this great event. We have also, in our midst, some fund managers that we have walked the journey with. Thank you so much. We have our customers here. So if you're here and you're a customer, feel welcome. We also have directors and management of related companies. We've seen Kenya Orient here, Kenya Orient Life, Orient Asset Managers, Dekio, Kidani. Thank you so much for being present here. We have our media as a for the state, so we are grateful that you could join us this morning. Above all, we have online followers who are following us online. Feel welcome to this great event. We have our directors, Family Bank, and also the management and staff of Family Bank team. So for all of us, this is a good opportunity for us to sit, to hear, and also to see what this great institution has done for the last 9 months, as well as what is holding or what is in the future for us. So I want to welcome you to this great event. And so that you can know who you can talk to in case you need anything, I want to request the executive management team of Family Bank staff, Family Bank, to stand up so that I can introduce them. And so that if you want clarification or something, you can actually reach out to them. And once I mention your name, you can just wave. So I have John there. John is our Chief Risk Officer. I have Belinda Baganga, who is our Chief Operations Officer. Once you mention, you can sit. Then I have Bildad Haemba, who is our Chief Internal Auditor. I have Elijah there, who is our Chief Transformation Officer. There is Jerry, our Acting Chief Human Resources Officer. I have Veronica Muthara, who is our Chief Credit Officer. Phyllis is our Chief Retail Banking Officer. I have John, who is our Chief Commercial Officer, our Company Secretary there and Chief Legal Officer, Eric Murai, and then we have Paul Garagari, our Chief Finance Officer. So that is a team that we lead this bank, I lead this bank with, and this is the team behind the results that you're going to share today. So to usher us to the next session, I want to take this opportunity to welcome our chairman to make his remarks. Karibu, Chairman.
Morning, everyone. hope you can all hear me. I'll make my remarks. They will be very brief, as most of the presentation will be done by the CEO and the team. Now, our esteemed shareholders and investors, and these investors include including our former governor, Governor Kidero. Can you just show by raising your hand? Family Bank directors present here today. Our CEO, Madam Nancy Njau. Family Bank Executive Committee members present. We also have directors and executives from our subsidiary companies here today. Members of the fourth estate, and I don't know why they are called members of the fourth estate. Ladies and gentlemen, good morning. Now, I'll tell a story. Now, during our last investors briefing, and this was held on the 19th of August 2025, we presented to you our results for Q2 2025. Now, those results showed a significant improvement. In fact, the improvement in our PBT was 39% as compared to 2024. We also made a special announcement that day, and that announcement was about our journey to list our shares in the Nairobi Securities Exchange. Now, today's briefing, ladies and gentlemen, is both about that listing journey as well as our performance for Q3 2025. Now, on behalf of the board of Family Bank Limited, and at this juncture, please allow me to introduce the directors. Can you be upstanding, directors of Family Bank? We got our vice chair, Director Kiriri. We've also got our chair of board audit, Director Winnie Nyamute, our chair of credit, board credit, Dr. Penina. I hope I'm not missing anyone. Our chair of risk, Director Mary. Our founder, and kindly clap for Mr. Muya. Mr. Muya, he doesn't chair any board committee meeting, but he actually motivates all of us. And have I missed any director present? And our chair of the HR board committee, Director Ann. Thank you very much, Director. And yes, and this is our newest director representing KTDA. I think it's your first time to be here in such a meeting. Karibu sana. You can have a seat. Now, I think there's a director hiding himself. Oh yeah, Director Julius. Julius, karibu sana. Thanks very much. I would like to thank you, ladies and gentlemen, for taking time out of your very busy schedules to join us this morning. I trust that you find this session useful. I would also encourage you, on a separate note, to use this as a networking opportunity and at least exchange your contacts with at least one person before you go home. So, ladies and gentlemen, let me start by saying this, that the Family Bank has continued to record very good performance. And this is credit and thanks to our dedicated staff led by our able leader, Captain, the CEO, Madam Nancy Njau, and her leadership team, which she has already introduced. Now, details of the Q3 performance, as well as the progress we have made in implementing our strategic milestones, will be shared with you by our executive team. Now, I will now proceed to update you on the events that have taken place since we last met you in a similar forum. And allow me not to extend that to include the performance, which will be ably dealt with by our executive team. Now, soon after our Q2 results, we actually convened a meeting almost immediately. Our Q2 results were announced. We had the meeting on the 19th of August, and the day after, that is the 20th of August, we convened a board meeting and passed a resolution recommending the listing of the Family Bank Limited shares in the Nairobi Securities Exchange. And we did not stop there. Soon after, on the 27th of October 2025, we also convened an extraordinary meeting of the shareholders, and they passed a resolution approving the above listing and authorizing the board to expedite the listing of these shares. Actually, as though our shareholders had been waiting for this recommendation from the board. And that resolution was passed with a very, very high percentage of the members present. A little bit about the way forward, ladies and gentlemen. I think by the end of this year, we expect and we hope we'll be getting regulatory approvals from both the Central Bank and the Capital Markets Authority. So come next year, between January to around March, we shall carry out our internal readiness assessment, our due diligence, and valuations. We therefore, in all probability, expect to commence trading Family Bank shares in the Nairobi Securities Exchange by mid next year. Now, for those who might have some concerns about the timing of our listing or even the valuation of our shares, today's presentation by our management on the performance of our bank should put your minds to rest. But that notwithstanding, we shall also be available to answer any questions, concerns, comments that you may want to raise with us thereafter. Now, ladies and gentlemen, let me talk a little bit about a different work stream. Now, while all this work on listing was going on, we've also been progressing very well on a different work stream on capital raising. Indeed, the strategy here was to raise our capital so that we are extremely strong by the time we go for listing. So we had a program, a two-phased program for capital raising. We started with a rights issue, and more recently, that progressed to a private placement. The results of the private placements will be announced next week. We have a deadline to complete our reconciliations and other formalities by 30th of this month. And therefore, we will announce those results next week. So I will not go into the details of that exercise, but I think to actually satisfy some of your curiosity, allow me to say this exercise was very successful. And the success will enable us to proceed to listing from a position of strength and with minimal downward risk as to the value erosion of your investments. So, ladies and gentlemen, what is our call to action today? Now, as we share our Q3 performance with you today, our focus remains firmly on the execution of our strategic initiatives and on delivering sustainable and long-term growth for the bank. Now, we therefore call upon all key players, and all of you are very highly valued stakeholders and key players. And these include our esteemed shareholders. We also have fund managers present. We have investors here present. We even have, I believe, development finance institutions. We have other strategic partners and all other stakeholders. And we call upon you to actively support our listing agenda and our long-term strategic focus. We greatly value your continued show of confidence in us, your advice. Advice is very important, and your active participation in this process. Now, these are all very critical to our success. We also encourage you, and I'm talking now on the business front, we encourage you to continue engaging the bank through deposits, placing deposits with us, taking up loan facilities, and even the broader service utilization as we advance our shared journey of growth to prosperity. I'm coming close to the end of my remarks, but let me emphasize that as a homegrown bank, and I will emphasize homegrown bank, because that is one of the things that makes us a bit unique. We have kept the homegrown character of the bank. And I must emphasize that we have a very strong focus on supporting our SMEs. And these SMEs provide a huge diversity across agriculture, trade, manufacturing. And we are also now focusing on ESG, environment, and even clean lending. Let me say that your continued confidence and support affirms our conviction that the future can only be bright for Family Bank, for the economy, and for Kenya as a whole. Accordingly, you can expect more regular communication from us, including timely updates on the listing process. And we also continue to walk this journey together. Now, going forward, and let me start to conclude by saying this. As a board, we remain firmly and fully committed to good governance, transparency, accountability, as these are expected of us in fulfilling our fiduciary responsibility to all stakeholders. We remain steadfast in our mission to empower, to inspire, trust, and to deliver long-term value to all our stakeholders. We are confident and steadfast that with your steadfast support, we will deliver sustained growth trajectory and strengthen our market position. I would once again like to extend my sincere appreciation to you, our shareholders, partners, customers, regulators, for your unwavering support and the vote of confidence. So, ladies and gentlemen, let me leave you with this famous saying from Martin Luther King. And this is how it goes. Now, the time is always right to do what is right. For the last 15 years, Family Bank has monitored, let me repeat the saying. It says the time is always right to do what is right. That's Martin Luther King. And I'll close with this remark that for the last 15 years, Family Bank has monitored all indicators. Now, these indicators include the macro environment, which the CEO will talk a little bit about, the share valuation multiples in the stock exchange, the securities exchange, the regulatory environment, our own performance as a bank, our strategy, our people, and of course, the asks of you, our stakeholders. Now, for those of you who are advising people to invest, please do remember diversification is very key. So even as people put a little money in bonds, you know, a little money should go to land. And of course, a lot of money should go to shares, as these are growth instruments. So, ladies and gentlemen, let me conclude by saying we are very grateful. May God bless you all. God bless Family Bank. God bless our great country of Kenya. Thank you very much.
Thank you, Chairman. Thank you indeed for your guidance and leadership. Indeed, this is the right time to do the right thing. Another round of applause, please, for our Chairman. So remember, today again, we are here for Q3 investor briefing and give the story of Family Bank through the strategic priorities that we have. Another round of applause as we welcome back our CEO.
All right, thank you very much, our chairman. We really appreciate our chairman. And so they are very eager to really learn more about this great institution, Family Bank. So I'm going to share about us so that you can understand and appreciate our journey, and also to appreciate where we are seeing ourselves play within the next couple of years and into the future. Just to refresh us, that it starts with the responsibility of coming up with financial solutions that are tech-driven. So we have a lot of innovations happening around that, and very soon you'll be able to see how it is plugging in the overall group numbers. The last subsidiary is the Family Group Foundation, and this is our social investment arm where we are able to what do we believe in as an institution. Our vision, and I like repeating it because this is what drives us. Anytime as management we are sitting, we always ask ourselves, are we still within our vision? And our vision is to be the financial institution that leads in positive transformation of people's lives in Africa. And Africa is very prominent in our vision because we believe as a bank, we have everything that it takes to transform lives, not just here in this country, but also in the region and Africa at large. And this we do, we positively transform people's lives by providing quality financial services through innovative, efficient, and reputable practices. That is our mission. In terms of our purpose, is we enable people to create and sustain wealth through access to flexible, affordable financial services. That is why we exist as an organization. And as we do this, there are values that drive us, values that are core to us as a business, and values that every staff of this great institution actually lives, so them forward. In terms of how we sit currently, we are having a footprint of 96 branches, and this is and growing. We've had some additional ones this year. Support of quite a number of merchants that are offering our solutions across the country. We have about 92,000 merchants who are doing business with us. We have 5,000 agents, and these agents are spread across the entire country. So these ones are not limited to the physical presence within the 32 counties. And this helps us to really give services and deliver value to our customers. In terms of our brand as Family Bank in this market, we are very strong and trusted brand with a loyal retail and SME customer base. Courtesy of our journey, having started 41 years ago, we have been able to entrench ourselves within the markets in this country, and we have a very strong base within retail and SME customers. And our brand is a brand that and this is the pillars that are holding us even to be able to drive the business that we currently have. In terms of our digital readiness, we find that 92%, over 92% of our transactions are happening digitally. And we have, and so we appreciate that we've been able to invest heavily on that, on the digital platforms. And we've also had enhanced customer service experience and technology-driven products rollout across the organization. Customer services that we always receive, which we commit to action on and ensure that we are serving you well. Within our foundation, we've been able to have a focus on environment and education. As pointed out by our chairman, we are very keen in ensuring that you're running our business in the most sustainable way. So these customers, 1.3 million also informed or influenced the results that we are releasing today. But look at the annual growth rate or the annual GDP growth. You have seen that there is some growth that is being recorded this year with a projection, giving us an opportunity to tap on this growth rate, to tap on the opportunities that are coming up, the sectors that are opening up. We know last year we had some sectors that were a bit constrained, but right now we are seeing a lot of opening up within the various sectors. And as a bank, we are positioning ourselves to tap on the opportunities that are being brought about by these indicators. The other thing is on annual average inflation. Again, this is a parameter that has more or less stabilized at 3.65 as of September. And what that means is that money in the pocket is there, and it's also signaling 0.25% as at October, as at last month. What does this mean, October, as at last month? What does this mean? It creates an opportunity for us as a bank to release much more funds at affordable deposits on. You can also see that that has been coming down. You can also see that that has been coming down from last year. We had the highs of 16.8% at some point last year, but now we are seeing it coming down to around 7.78%, and also 7.8 and 9.38%. And if you look at the other piece on deposits and lending rates, you can see that the same has also been coming down across the months of the year. So what this means is that we've been able to deploy credit, and our numbers speak to that effect, that we've been able to deploy credit to the private sector, and we've been able to assist or to intervene in terms of economic. What does this mean? With this kind of stability, we have seen, especially our customers who are within the trade sector, who focus on imports, it's really worked well for them. The stability of the shilling has enabled them to do business much well. And these Kenya shillings year to date. And why this is important for us as a bank is that it helps us to come up with strategies to tap on that market. We know we have quite a number of our customers within the diaspora market, and this has made us to have a very vibrant an interaction with us for the very first time. Just to mention that consistently for the last 5 years, this is a bank that has been recognized in Customer Experience Awards by Kenya Bankers Association. So we don't take that for granted because our staff, our team has been dedicated to ensure that we have these sort of awards. All these are awards that we've been able to bag as a bank this year within our SME and agribusiness space and agency banking space, which really speaks to our focus, our strategic focus going bank. You form a team in a bank, you run a bank well and profitably, just making sure that you're deploying capital as expected, balancing your balance sheet, and making sure that you return value for the shareholders and for the investors. And this competition has been running for the last 3 years, including this year. And I want to confirm to us that we have a great talent in Family Bank. For those 3 years, Family Bank has emerged the best bank in that competition. And for your information, this is not a Kenyan competition. This is an African continent competition. And these awards were happening in South Africa. So we have a team of talented staff. The team that is behind running this bank, it is talented, it knows what to do. We have skilled them, we have invested in these resources, and the journey can only get brighter as we get along. And the results that we are announcing today, or we are releasing today, are actually a testament of the kind of clarity that we have had in our strategy formulation, and even the kind of discipline that we are having in terms of our execution. The other pillar is compelling customer propositions. Yes, indeed, we have customers. We have a very strong customer base and efficiency, because we know as investors, as shareholders, we have placed our funds here, our investments here, and you need to get return. So as management, we are committed to ensure that we run this business in the most efficient way so that we can be able to return value to the investments that have been put in this bank. We are focusing on really checking our staff. We understand the risks that are associated with it, and we are positioning ourselves, investing to make sure that we are running this bank prudently and making sure that we are mitigating all the risks. What that means is that this is our first year, just engaging our customers, getting to understand and to appreciate what is this that we need to do for you. What are these needs that you have? What are these solutions? What are the pain points? How can we intervene? How can we come up with interventions that are going to help you in growing your business? And for your information, and maybe you have seen it, we are positioning ourselves as the preferred bank for Biashara, and majorly focusing within the MSME space, because we know the opportunity that is there and the kind of contribution that this segment then makes within our country and also within the labor force. So these forums that we are having is a conversation we are having with our customers, just to appreciate their journey and to see how we plug in as a bank. We had such an engagement in Kangemi. We also had another one in Kisii, in Kilifi, another one in Thika. These are our agents. Remember, I've talked about the agents that who are currently helping us to run our business. And we are having engagements with them just to appreciate also the kind of work that you have given them and the kind of support that is required. So all these engagements are aimed at strengthening our working relationship and also appreciating them for their continued partnership and support in driving the bank's agency banking business. Another engagement that we've had is really going to specific sectors of our economy. We know coffee. We've had engagements within coffee society directors. And this is giving us a lot of feedback so that we can be able to come up with solutions, with products that are going to help us to meet their needs. I've talked about our women banking, and we sponsored a number of women SME customers for coaching sessions in partnership with one of our key partners, ASED Africa and Ronald's LLP. And these forums or this coaching was focusing on strengthening business management, financial literacy, because we know that is a gap that is there, and also access to finance for women-led agribusiness SMEs. And this is reinforcing the bank's commitment to supporting women-led enterprises. And this is anchored on our MSME. So what you see there is actually a graduation for all those women who went through that coaching session. We've had also engagements with our customers, some who are banking with us, just supporting them in their business, and some of these photos are actually a clear demonstration. We partnered with one classic circle called Rebel, just to see how we continue increasing and supporting them in their business and across their journey. And these are just but a few. We've had quite a number of engagements with our customers. Through our Family Group Foundation, we've also had some beneficiaries. We train women or youth, we train youth in some of technical skills. And what you can see there is we are having a team or a showcasing of some of the graduates who have gone through our program, where they showcase their electrical and plumbing skills, and they did this to the Chief of Defense Forces, as you can see there. And this is something that we are doing through our Family Group Foundation. As a bank, we are playing big through our foundation in education sector. And this is an engagement that we've had at all counties, just having engagements on how we can support the vulnerable children who are bright, and they are joining grade 10 next year. So this is part of the conversation that is happening across the entire country. We celebrated our fund managers, asset managers, who've walked the journey with us. I've said we are committed to really engaging customers, engaging our partners in this journey, because we believe once we have such kind of an engagement, then we should be able to go far as an institution. This is just a show of, or a demonstration of the engagements that we had recently, appreciating the incredible support that we have received from our fund managers, who, again, looking at all the associations on the ground. That is another engagement that we had in Wote for Makueni Hospitality Association, just understanding what are their needs, what are the solutions that we need to come up with as a bank so that we can be able to meet them and to support them. In the course of this year, allow me to mention that, and in line with our strategy, we've been able to onboard very key strategic partners who have come and supported us across our journey. One of such partners is European Investment Bank, and this is the day that we're signing off a 50 million euro, whereby the bank, we are going to match the same. It was coming to around 14.7 billion Kenya shillings. And these are funds that are aimed to be deployed to women, youth, and SME financing. So what are we saying? Our customers, if you're there and you fall in this category, there are funds ready to support you in your journey. And we really appreciate European Investment Bank, even for this partnership that we had this year. The other partnership that we've signed up this year is with British International Investment, where we signed up a facility of $20 million. And this is supposed to support our MSME in trade. And remember, as a bank, our focus is to be the preferred bank for Biashara. That is where you are going to see a lot of support. A lot of partners are coming up to strengthen this MSME sector, this agribusiness sector, so that we can be able to achieve our strategy and our strategic plan. So that is the ceremony that we had when we were signed off. And most recently, we signed up a Tier 2 capital of $10 million with Blue Orchard, which came in very, very handy for us to strengthen also our business, to strengthen our capital, and we appreciate. These are the like-minded partners that you're working with across this journey. So we appreciate all of them, and I know there are some who are represented here. I don't know whether we have any of the three represented here. You can just wave. We appreciate you. Yes, they are there. We appreciate you. Thank you so much for walking this journey with us. And this is a testament that Family Bank, we are on the right track. Just to mention, these are others that I've not mentioned in the previous slide, but you're walking this journey with. There's some of them. We also have others who are joining us. And if you're there and you've not partnered with us, it's time. I think our chairman has given us a quote. I don't want to misquote it. But he said, time is always right to do what? The right things, right? So this is time to do the right things. This is the time to invest in Family Bank. This is the time to partner with Family Bank. This is the time to bank with Family Bank. You clap. This is the time. This is the time. And you know what? Opportunities don't last forever. So we are inviting all of us. Thank you for those who are on board. And I know even some of us who are on board, there's still much more that we can do with this great institution. You can see the success stories. And I know you're waiting for the numbers. And they're not going to say anything different other than a success story. So what we are saying is Family Bank is a place to be. Family Bank is a partner. Family Bank is a bank to watch. Family Bank is the next big thing in this organization, in this country and beyond, is the next big thing. And we have no single doubt that this is the next big thing in this industry. When you look at the growth that we have received, or we have recorded over time, this is also a clear demonstration that our strategic focus is bearing fruits. If you look at MSME and retail segments, they're the fastest growing sectors. Within, if you are to compare year on year, we have grown by 61% within our retail and MSME. And I have mentioned time and again, why MSME? Because the opportunity is huge. The opportunity is massive. And Family Bank, we are anchoring ourselves to that, and you're going to walk this journey. Our corporates, we have seen also record a double-digit growth of 39%, which is also, if you look at the market, is something that is like an outlier in this market. Some of the numbers that you're going to demonstrate here is actually an outlier because we are not ordinary. We are extraordinary as Family Bank. So this one keeps underpinning a strong demand for funding facilitated by the shorter sales cycles. So we'll continue walking the journey. We'll continue supporting our customers. We'll continue understanding and appreciating and coming with solutions that are speaking to the very needs of our customers. Allow me now to invite our Chief Finance Officer so that he can come and give us the numbers for Q3. Out of the many stories that I've given, the good stories that I've given, I know msema ukweli yako hapa, si ndio? So I'm going to invite our Chief Finance Officer, Paul Garagari, to come and take us through the Q3 numbers. Karibu, Paul. Let's appreciate him as he comes.
God is good, and all the time. Let's start and stretch a bit. Sorrow is healthy. Don't walk out. Just for a minute, just stretch before we get to numbers. Thank you. You can take your seat. Thank you, our CEO, Madam Nancy, for putting things into perspective. I'm here to bring to you investors, shareholders, customers, our scorecard for the last 9 months. But before I do so, I've been requested by my chairman to recognize the presence of our subsidiaries directors. They could start at the wave. Our subsidiaries directors. I can see Kahaki from Kidani, can see TK and Mark. Welcome. We value your support. We are going to get into numbers. The numbers, as I always say, tell a story. And I'll start with a statement of financial position. Our balance sheet as at September closed at 202.5 billion. And I want to put some perspective into that number. In June, year 2021, our balance sheet closed 100 billion mark. Today, we are looking at 202, meaning in 4 years, we've managed to double the size of Family Bank from 100 to 200 billion. And during that period, we were growing at a rate of 13-14%. Within the current strategic period, you can see the numbers. We've started to see the growth getting to the ranges of 30, some parameters, 48%. And I'll go line by line for most of the key parameters. Balance sheet is usually supported, or the assets are usually supported by liabilities. And as a banking institution, our liabilities come from customer deposits. Between September 2024 and September 2025, we've seen our deposits grow by 19 billion. And if you look at where we started in January, we started at 126 billion, and we've grown to 146, meaning 100% of our growth came in year 2025. The other parameter that supports the assets is what we call shareholders' fund. And I really want to appreciate you, our shareholders, because this number tells a big, big story on the confidence you put in Family Bank and in management to manage your resources. Our shareholders' funds increased from 19 billion to 28.2. That's 9 billion growth. Another story on the same, the highest growth, 87% of that growth has happened in year 2025. Meaning, whatever our CEO has reported in terms of our strategy execution is bearing fruit. And we're seeing that number growing by 48%. And we are projecting it will continue to grow at that rate into the future. There's a line there called other liabilities, which has grown by 113% from 4 billion to 9.9 billion. Or say this year, that line has grown from 5 billion to 9.9. And that line confirms the volumes of the transactions that go through our banking institution. The more we are doing transactional business with our customers, the more then we have balances in transit. And that's why that number continues to grow. It confirms that our digitization strategy is working and customers are trusting us in terms of transactional banking. We've also supported the balance sheet by getting funds from our partners, DFIs, and that number has grown from 7.4 where we closed in December to 10.6. That's approximately 3.2 billion growth. And that is very, very deliberate. Even as you're running an institution, there are several parameters you have to balance. You have to balance debt and equity. And of course, those optimal levels that you have to ensure you don't get beyond. And as of now, I can confidently say our bank leverage is within our optimal levels, and we are getting to optimize most of the debts that we have in our books. In fact, and I know our DFIs are here, we've seen and gotten an opportunity to continue to get funds at concessional rates from our DFIs, and that is the money we are deploying to support various sectors. What we get is what we call impact funds, women, youth, and agriculture, and we'll continue to deploy that money. So even as you're looking at that number, know that we have 10 billion from DFIs. That money is meant for you, our customers, because even the shareholders we have here, all of you are our customers. And the money is available, come for it. We are efficient. Our turnaround is among the best in the industry. That is on the liability side of the balance sheet. And how have we deployed the funds? The key core mandate of a banking institution is financial intermediation in an economy. That means we collect money from those who have and lend to those who need. And that way we are able to support economic growth. In year 2025, January to September, we've managed to grow our loan book from 92 billion to 103 billion. That's over 10 billion growth. Let's appreciate that number. And why that number is important, because it confirms that we are doing what we are expected to do in an economy. We are here to support the economy, the government strategy, and our key objective is to continue to grow the economy of Kenya. We also have to manage the money we collect from customers before we deploy to the borrowers. And because of that timing difference, where you're getting deposits, but you have to do loans application and processing, then you have to manage what we call assets liabilities management. And that we do by deploying the money into other asset earning instruments or interest earning assets. And we parked some money in government securities. Last time when I was here, when we were raising half one results, I indicated we've seen a change when it comes to where the funds are being deployed. Yes, between December and September, we had 10 billion deployed there temporarily as the economy recover, and we will definitely push that money to customers. Just want to point something around the loan and advances to our customers, and that number will be reflected in a subsequent slide. For us to grow that number by 10, 11 billion, today we are dispersing in excess of 1.8 billion shillings per week into Kenyan economy. 1.8 billion into our economy per week. That's the impact we are creating in Kenya. We've definitely invested heavily in digital and digitization. And most of the small tickets, and for us, small tickets are amounts below 500,000, are coming through our digital channels. We have a state-of-art mobile platform, and if you go there, you're able to see how much you qualify as a customer. So you don't have to spend a lot of time coming to a banking halls. You should be able to access money in a very efficient manner through our digital platforms. The other items to discuss here is on cash and bank balances. We continue to be very strategic on how we are managing your resources. We don't want to pack a lot of money in cash. And this cash we have of around 13 billion, which is a growth from 9 billion in last year, is all meant to support customer transactions. And these are the balances which we put in our ATM channels, in our central bank channels, in our banking institutions abroad, just to facilitate your activities globally. We continue to lend money in the interbank market. As at September, we had lent out 3.8 billion, which is 1 billion up from where we closed last year. And this is the money we've given other banking institutions to support them in their activities. On shareholders' fund, That growth in that number is as a result of, one, you know, we've been in the market raising capital, and a number of whatever we've been able to achieve will be reflected in that number as well as in other liabilities, because it's some money we have to get approval from central bank. And I'm sure, as our chairman indicated, by next week we should be able to announce the results of that transaction. But the money is already reflected in different parameters, different lines within our balance sheet. We've also had a lot of support through retained earnings. And you can imagine that number grew from 22 to 28. And early in the year, we paid dividends amounting to shillings 1.1 billion. So despite paying out dividend, our shareholders' fund continue to grow. I can confirm the requirement by Banking Act to increase the shareholding will not affect Family Bank in any way. Our shareholding is way above the 10 billion requirement for year 2029. This is just but the same numbers presented in a graphical format. But I want you to look at the ratios, the percentage growth, And when I was here last time, we had a number of our parameters grow by double digit, apart from loan book, which was growing at around 9%. We've seen that has started to accelerate to the ranges of double digit. And as of today, we're looking at not only growing by 12%, 13%, as it happened in the last 5 years, but you're seeing in the last 9 months, our growth getting into the ranges of 20 for total assets, shareholders' funds by 48%, and that will also be replicated when it comes to our profit and loss accounts. It's important to report to you how we deployed the funds that you shared with, or you've given us. Our funding largely comes from customer deposits. 2025, as you can see, 72% of our balance sheet being customer deposits and 14% being borrowed, being shareholders' funds. That makes 86% of the resources that you've given us, because we have 5% coming from borrowing and a few other, that is 5 and 3% coming from balances due to other banks as well as borrowed other liabilities, But I want you to look at how we are balancing the balance sheet, how we are managing the balance sheet. You have 72 and 14 being capital and customer deposits, but on the other side, 86% of our assets are what we call interest earning assets. So you've not given us money which you've parked in bank deposits or to build branches and premises. All the money you've given us, we've deployed 86% into interest earning asset. And that is confirmed by some of the key ratios that you see being net interest margin and such growing at a very accelerated rate. So shareholders, investors, fund managers, and everybody in this room, you can trust us with your money because we are not doing lazy banking. We are actively involved in financial intermediation. I indicated, we've seen the disbursements we've done into this economy growing by 27% from 51 in 9 months to 65 billion. And that's the number I'm talking to in terms of over 1.8 billion every week being disbursed into our economy. And over 60% of that, as projected by our CEO, getting into retail and our MSME customers. That is medium, small, and micro enterprises. Micro, small, medium enterprises. So over 60% of what you're seeing here is going into MSME. When you look at the statistics that were presented sometimes back, our economy lending has expanded by 3.3%. In Kenya, the lending to private sector as at October, that is based on central bank reports. And out of that 3.3 expansion into lending, Family Bank has contributed 27% of that. Let's appreciate that number. This confirms that we are truly transforming lives. Let's look at our statement of financial performance. We'll focus largely on the group numbers. And I'll start with the bottom line. Investors, everybody in this room, this is a moment the bank has managed to grow the profit after tax by 56% in 9 months. That is at group level, and at bank level, growing at the rate of 77%. How did we manage to achieve that number? One, the activities we've had over lending and investment in interest earning assets have managed to generate for us 21%, that is interest income, while at the same time, we've managed to reduce our interest expense by 3%. That is by over 200 million. And I want to explain that number. Some of these parameters have to be aligned with the economic, macroeconomic factors and parameters. In year 2025, we've seen the rates that the government is offering for T-bonds, T-bills, come down from the ranges of 14, 15% for bonds to 12, 13%. For bills, we've seen those rates come down from the ranges of 11.1% to the highest today of around 8 to 9%. And that means then we are able to mop up a lot of funds from the economy and also giving us ability to also disburse and lend the same to our customers at affordable pricing. This year alone, we've repriced our loans downward several times, just to ensure that our customers are able to access credit. In addition to that, most of the funds we are getting today, we are getting our support from you fund managers and also from our customers' integrations. And through integrations and digitization, we are able to offer solutions to you. Today, as a bank, we are able to integrate our systems with your systems within a maximum of 4 hours. If you need to integrate your systems with our systems, we can do that within 4 hours. And you have your finance team being able to just approve payment from your ERP, and the same money hits Family Bank and any other bank within seconds. That is the level we've achieved as a bank. And that is part of our transformation journey. On interest income, most of the growth has come from deployments we've had, not only in loans, but also in government securities. And all this is meant to protect and give returns to you shareholders, while at the same time providing solutions to the economy. As a result, we've seen our net interest income grow by 43% to 10.9 compared to 7.6 where we closed in year 2024. That points to business fundamentals. When you see a banking institution being able to grow net interest income, it means something is happening, something that is very, very deliberate. Because we are managing the resources you've given us, and at the same time, we are deploying in a manner such that we are also not creating non-performing loans. And why am I saying this? If most of our book was getting into non-performing loans, then our net interest income would not have grown by 43%. Because when a facility becomes non-performing, you either stop charging interest or you move the interest charged to what we call interest in suspense. That does not form part of your income. And this gives us that confidence that it's something we are doing that is right. And the way we've done it, and I know our CEO mentioned this, we've had to invest a lot in our people, training, and also ensuring our risk management strategies are working such that we are able to identify a potential distress from a customer in early stages and provide solutions to our customers. We are that bank that is caring. We believe we are a family. So we had hold our customers from the point of underwriting a facility to the point the same is repaid. And allow me to mention, as a result of that, we've seen a lot of customers coming to us, and as our CEO projected, in the last 9 months alone, we've managed to grow our customers by 100,000 customers within just 9 months. Let's appreciate that number. It's not easy. Our non-interest income growing by 400 million from 3.3 last year September to 3.7 in September 2025. 14%. How did we do it? In addition to investing in our digital transformation, digital solutions, we've also been quite deliberate on diversification. Today, and you see the numbers, we have a vibrant family bank insurance intermediary that is contributing significantly to our non-funded income. So it's helping us in several folds. One, for every customer who comes to us to take a facility, they take an insurance cover. So God forbid, in case of any eventuality, then your family is not exposed to having to repay the loan because we've taken insurance. But at the same time, shareholders, we've also ensured that we're also getting a return from that business outlet. We've also invested into custodial business. It's one of the youngest business we've put in our basket. It's bearing and returning some very good traction. So fund managers and everybody here, we're in that area of operation. For any custodial needs, Family Bank is the place to come, and that line is contributing. That business line which we've introduced is also contributing to non-funded income. So we have custodial solutions that match any other custodian business in this market. Recently, we also introduced a digital subsidiary, which our MD mentioned. We've introduced a subsidiary that is involved in developing software solutions into this market. And that also part of our subsidiary, and the numbers then are reflecting the diversification strategy that we've deployed going into the future. Our total operating income growing by 34%. That is by 4 billion from 10.9 to 14. There's a number there which we need to look at for you shareholders. We've increased our loan loss provisions from 500 million to 1.3 billion. While at the same time, our NPLs have reduced from 14% to 13%. So one may wonder how then comes your provisions for NPL is going up. We've done it, we've been quite deliberate, and if you look at the current accounting standards, you are required to be what we call forward-looking. You project the macroeconomic parameters, and for every loan you underwrite, you take some bit of provisions. Meaning, we've disbursed in excess of 65 billion into the economy. And even as we disburse, because most of our customers are in trade, biashara loans, and consumer segment, the standard requires that then for every facility you disburse, you take cover. That does not mean that that facility is gone into NPL. It only means that you've cushioned your book against any macroeconomic parameters. This is a strategy that is working for us because as of today, if you look at our NPL coverage ratio, it's in excess of 73%, meaning we can be able to write off over 73% of our loans without having to dispose any customer collateral because we've taken adequate cover from a financial perspective. Before I move out of this, I want you to note that our profit before tax for the group closed at 4.4 billion, up from 3.2 billion in September last year. But what I want you to appreciate is that by September, we'd achieved more than what we made in the last 12th month of year 2024. Last year, we made 3.9 billion. By September, the bank had surpassed that number, which confirms something good is working, and that is where we need to continue to do the good things that we have been working on. I've discussed this. From this point of view, just look at the operating income, PBT, PAT, all growing by more than 30%. That's the message there. In the last 5 years of our strategy, that number or these numbers were growing by approximately 13, 14, 15%. But as of the last 9 months, we are now realizing over 30% growth. Contribution of our subsidiary, 13%. They've contributed 345 million into our revenue in year 2025, 9 months, and over 226 billion profit before tax. As I conclude, just to mention a few ratios. Core capital ratio, and this core capital ratio closing at 13.9, an improvement from 13.1, and a statutory minimum of 10.5. So we are way above that the regulatory requirement. Our liquidity closing at 54.4% against a minimum of 20. And that's why I indicated we have money available for lending. And we are calling upon you for any financial needs, we have the solutions. Our capital adequacy ratio improving from 16.5 in Q3 2024 to 17.2 as at September 2025. And I want to appreciate all of us who've participated in our capital raising journey, because you helped us to improve that ratio. And even for any other shareholder, we don't take it for granted, because you've been with us, you've supported us. And as we conclude, because we're likely to conclude that process next week, that ratio will be expected to go up to the ranges of more than 20%. And that's where most of the banking institutions are. Book value per share, shareholders closing at 19.6 against 14.2 in year 2024. And I always explain that today we can be able to sell off all our assets, pay all liabilities, and every shareholder will walk away with 19 shilling and 60 cents as at September. If you were to sell the bank and pay off our shareholders, that is our book value. And of course, when you came to the market to sell shares, we promised to do it at a discount. We did that at 14.5 shillings per share, and you can see the value we are creating for you. Sold to you at 14.5, the book value is at 19.6 shillings as at September, and it's projected to continue to go up. Dividend per share 2024, 85 against 56, and that was a 51% growth compared to prior years. Our return on equity, 15.7%, up from 12.1% in year 2024. And shareholders, I know you know there are various asset classes in this market, and most of them are not giving you the rate of 15.7%. This is way higher than what is available in the market. So the more reason as to why you should continue to support your bank, because the numbers are pointing to a success story, and the returns you are getting are way above what is available amongst all the other asset classes. So I'll stop there, or invite my CEO to close the financial presentation. Thank you, and God bless you.
Thank you so much, our CFO. 56% growth deserves a better clap. Yes, this is something that we are really grateful for, and thank you so much, as I said, to our customers and to every stakeholder for that support and for trusting us with your business. Remember, I said this bank took off, and you're now flying high, and we want to fly higher and higher and higher, because the foundation has already been laid, and we have a team that is focused in ensuring that then this bank goes higher and higher and higher. Just to wind up, allow me to mention a few things about the next phase of growth and what we are seeing. Strategically, we are well positioned for the next phase of growth as an institution. You've seen the very strong financial performance, the strategic balance sheet growth, supported by our SMEs, our corporates, our retail clients, which we really appreciate so much. I think, and I must say, we can't thank you enough, our dear customers. We've also seen improved asset quality, which we are continuing to focus on as a business, and the profitability uplift, which is driven by optimized funding mix and digital channels. We continue focusing on our non-funded income, investing heavily so that we can be able to leverage on that and to drive our next phase of business. So what we are saying is that the foundation on the financial performance is going to take us or to catapult us to the next phase of growth. The other thing that we have laid foundation for the growth of this bank is operational excellency and excellence and efficiency. So we are having quite a number of initiatives, as I had mentioned earlier, that are going to help us to drive cost efficiency through branch optimization and digitization. And this is a conversation that you're having, and our customers will be able to see that come to effect. I know they're asking, what is this that you have for us? But for us as a bank, we are saying, we want to give you platforms where you can be able to serve yourselves well. So as a bank, we want to have, to run this business in a cost-efficient way. We'll continue to invest in data analytics for predictive decision-making and also to strengthen our internal controls and enterprise risk management. This is a clear foundation for our next phase of growth. We'll also continue focusing on sustainable growth in high-margin portfolios. I've talked about the investments that you're doing, and also expanding our non-funded income portfolio and supporting our customers who are in a green economy or who are doing their business in a green way, and even as a bank positioning ourselves and strengthening our ESG framework to align with investors in expectations as well as global expectations. We'll continue to strengthen our capital buffers in anticipation of NSE listing. As it has been pointed out, we want to appreciate the support that we have received from our shareholders and from investors in terms of strengthening our capital base. And this capital base is going to help us to propel this organization, because as I said, this is the next big thing. This is the bank to watch. This is the institution to watch. And we appreciate that the buffers that we have are going to support us in the next phase of growth. As I conclude, just to remind us that we've had a number of engagements in terms of our listing journey. I think now it's all over there and it's out there that Family Bank is listing via introduction, and we want to appreciate all our shareholders because of giving us that resolution and approval to list. We've had engagements with the Capital Markets Authority just to see how then this progresses. So this is going to really help us in our next phase of growth, and what we are seeing is us achieving and surpassing our 2025-2029 strategic plan, so that then this bank is able to go to the next level. So as a bank, we are committed. We have a very committed staff. We have dedicated resources. We have passionate resources who are thinking every day about positioning this bank to the next level. And as we say, we are looking forward kufanikisha zaidi. Tufanikishe zaidi. This means we want to succeed. We have succeeded. Tumefuzu, we are enabling, and we want to enable more. We want to enable our customers more. We want to enable our staff more. We want to enable each and every stakeholders for more. So hashtag tufanikishe zaidi. So thank you very much for coming, and thank you for being part of our success story. And we'll continue building on this success story to even have a more successful story as we get into the end of this year. Thank you very much. Back to the programs director.
we could indeed do a better applause of that. You know, thank you, CFO, thank you, MD and CEO. You have taken us through a session of just looking at where are we at as a bank, where are we going, what is our journey looking like into the next 5 years, beginning this year, what are our strategic pillars, which has been highlighted, and what are the numbers that are speaking into those pillars. And so all what that session has done is to clarify the story behind the numbers, and the numbers, of course, putting focus into the story that has been told. And of course, it has been mentioned very clearly that what you want to do is to fanikisha zaidi. So that's wonderful. We thank you for that session. And we really did promise that we want us to be interactive. And so as we do that, I want to be welcoming the CFO and the CEO back on stage. But as they set up and as they come up on stage so that they could field a few questions, because I know as you crunch those figures, I could see a lot of calculations and a lot of notes being taken on the table. And I know even our online viewers, our stakeholders, and also customers who are following us online have also been engaging in one way or another through asking some questions. We would want to be in a position to respond to a few questions and to just field a few questions so that we can make this interactive as possible as we can. And as we do that, I know you have your gadgets with you. Please make your way to slido.com. Slido.com. I know those of us following us on the live feed have already been interacting with us. But if you go to slido.com, you will get to be asked or to be prompted for access. Just indicate there Family 2025. Family 2025, that is the access without the hashtag. And you'll be able to push your questions there. We'll be able to sample as many questions as we can, but please, as much as is possible, just interact, ask the questions. It could even be a comment. It could be a clarification or something that you might want to put across out of the numbers that you have heard, and of course, out of the interaction you have had from the CFO and the CEO. So feel free to interact with our online platform. We can see some questions already coming in.
Always respected, totally supported, and I'm gonna
As we do that, also feel free to refill your cups of coffee. As we mentioned, breakfast is still served throughout this morning. So if you still have a need for extra cup of coffee or tea, feel free to engage.
I am valued and always respected. I'm totally supported, and I'm gonna. It is not just a bag to me. It is not just a bag. You see, who's in the family? You see. Who's in the family? Who's in the family? Then you see, it's not just a bag. To me, it is family. To me, it's not just a bag. You see, who's in the family? Then you see, it's not just a bag. To me, who's in the family?
Great. I think we've made our short. We've asked enough questions. We've pushed enough. And allow me, ladies and gentlemen, to welcome our panel that will be comprised of our chairman, Mr. Lazarus Mwema. A round of applause as he comes up. Our chief executive officer, Madam Nancy, and our chief financial officer, Paul Ngaragari. Let's encourage them as they come. I think they are here to. Let's encourage them as they come. And I think I would also request Thank you, our panel, but I also want to invite our company secretary and chief legal officer so that we can broaden the panel as much as we can. This is for you, is to clarify as many questions as we can, which is important. So if you could get some help here, thank you. Thank you for that. We say when you deal with numbers, they say numbers tell a story. Others say numbers don't lie. But also we say that What numbers help us to do is to see where the rubber meets the road. And thank you once again. Let's welcome this panel. And without much further ado, there's a question that has come in. And I think the first question, we would want to pose this to our chairman, Mr. Lazarus. There's a question here that has come in saying, I saw that listing on the NSE is now by way of introduction rather than an IPO. What is the strategic reasoning behind this?
Can you hear me? Let me start by just saying three things with regard to address that question. So the first thing I would like to clarify is that our listing was mainly driven by the need for liquidity for our shareholders. If you recall in my presentation, I said that this has been a 15 years journey during which almost at every AGM, our shareholders raised the question with regard to when we are listing. So the first thing was to speak to that or to speak to that request. The second thing I would like to clarify is that usually listing by IPO is most appropriate when you have the need to raise additional capital. And if you recall in my presentation, I did clarify that we have indeed had a very successful capital raising initiative. And in fact, in our initial planning, we projected that once we do that capital raising, we shall have taken care of whatever the management wanted to do for the next 5 years. Now, if you recall, the management has been moving way ahead of our strategic plan. So you may well do your calculation and see that we may be in a few years coming back for more capital raising. And then finally, well, not finally, the second last thing I'd like to say to speak to that question is that listing via introduction is usually a shorter route. It's much simpler and gives you a very quick shortcuts to the market. So the final thing I would like to say is when you're listing in the situation we are in, after a successful capital raising, you're actually doing that from a position of strength. And therefore, you have a much lower downside risk for eroding the value of your shares. So for those reasons, and maybe one or two others, we've decided to go for introductory listing. Thank you.
Thank you. Thank you, Chair. I think a lot of interest there, and I think the public has really been waiting to see when does this brand go to the National Securities Exchange. So that, in a way, really clarifies some of the questions that are coming in. And now to the Chief Finance Officer, there's a question here. I think this would come to you, Mr. Paul. Will the January to March readiness valuation derived be concluded independently? And how will it relate to the valuation used for the recent private placement?
Thank you for that question. I'll start by indicating why do we do valuation of an institution. At any time you're conducting a transaction in the market, as management, as well as the board and shareholders, you need to know where you stand in terms of what is my value. The last valuation that we did for the concluded transaction was based on year 2024 financials, audited accounts. Our listing will happen in year 2026, meaning we've had a full year to grow the bank. And as you can see, we'll have added in excess of 40 billion into the bank balance sheet. that naturally means we have to do a fresh valuation, because as we get into the market, we have to take care of, one, the existing investors as well as the new one who will come on board. So yes, we'll do a new valuation. It will be done by independent licensed firms, because we have to use the firms that are licensed by the Capital Market Authority as well as Nairobi Securities Exchange. So we will do the valuation. We are ready. We've already started the process, and by March, we should be done with that process. Thank you.
Thank you, CFO. Thank you, Paul. There's a further question here, and I think I'll be back to you, Chairman. There's another question here, and it reads, despite that results will be released later, could you give us a broad sense of whether the capital raised met, exceeded, or fell short of the initial target? People are quite keen to find out how the exercise went.
So thank you very much for that question. Can you hear me now? And it just goes to reaffirm that whatever assurances and promises you give people that an announcement will be made by a particular date, there is always a curious person who wants to get the answer ahead of time. So without preempting the announcements or the results that will be announced next week, I can assure you that yes, indeed, the capital raising that we have done has exceeded the target that we set. And if that is not satisfactory, because the next question will be, what is that target which you set? Or somebody else will ask. I think we had a target close to around 6 billion shillings. So I hope that will keep that person calm until next week. Thank you.
Thank you, Chairman. Yes, you could feel free to applaud. And I think you're very careful not to let the cat out of the basket, which is quite in order. But then it's also good to appreciate the interest from the public. And we do really take that into context. I'd want to go to CEO and MD, Madam Nancy. There's a question here that indeed speaks a bit into our strategy and also what is in it for the customers, and it reads, beyond the financial growth, how does the 2025 to 2029 strategy translate into day-to-day benefits for customers? It's all about customers.
All right, thank you. Thank you for that question. The assurance that I want to give our customers this morning is that our 2025-2029 strategy or strategic plan actually has been formulated with the customer in mind. And customer is at the heart of that strategy. Why am I saying so? It's because we are having quite a number of initiatives that are going to help the customer to be able to access financial services and solutions from the comfort of where they are. A lot of investments are going to go to that front. You've heard from our CFO when he was making the presentation that some of these tickets that you visit our branches, you have to have an engagement, maybe the relationship officer with a branch manager, relationship manager, courtesy of an amount that you want to access, maybe it's 500,000, 1 million, or something like that. We are offering that on your platform, mobile platform. So what that means is that this strategy speaks to easy access of financing for our customers. It speaks to good experience as far as interaction with our platforms, our digital platforms are concerned. So we are going to see a lot of investments in technology, revamping some of the platforms that we have, our internet banking platform, our mobile banking platform, revamping some of the payment solutions that you're offering our customers. So what this means is that every single day, our customer will be able to benefit from the implementation of this strategy. Above all, this strategy speaks to the needs of the customer. As I mentioned, we don't want to sit and craft solutions. We want them to be needs-driven. So a lot of engagements are happening and will continue to happen with you, our customers, so that we can understand and appreciate your various journeys. We are seeing ourselves doing some business process reengineering so that something that was taking you 3 days could probably take you a day or less. So this strategy has been crafted with the customer in mind, and I can tell you that every single day you're going to enjoy the benefit of its implementation. Thank you very much.
Thank you, MD. Thank you, CEO. A lot of goodies there that is promised for the customers, a lot of automation and digitization, which means efficiency to how we continue to deliver our services and products. Thank you for that. Just to appreciate some of the comments that are coming through, someone is indicating here and saying, well done, Family Bank, keep on, we appreciate that. And now a question to, I think this one goes to our company secretary and chief legal officer, Mr. Eric. There's a question here, is the private placement recently done for capital injection going to dilute the shareholder value to existing shareholders generally?
Thank you, JK. And thanks for that question. I would say that we have a few key shareholders with significant shareholding. And as we may be aware, some of that are above, or some of those are above the regulatory limit. So I see where this question is coming from. And I can confirm that some of the key shareholders have not participated in the recent capital raise, and therefore you're going to have some level of dilution. However, we may not give the figures and so on until the results are out next week, as promised by the chairman. Thank you.
Thank you, Eric. Thank you for that clarification. Indeed, as I mentioned, a lot of interest around listing, and properly so. I think I want to go back to you, CFO. There's a question here. As you transition to a listed entity, are there new specific products or partnerships, for that matter, in the pipeline that will further this agenda?
Thank you. A very good question, because for every financial institution or any other business, you have to keep on refreshing your products. Over the years, we've reviewed, improved a number of our products. We'll continue to do so into the future. And most of the number of products we are lining up are product aligned to a digital journey. So yes, you will see us coming into the market, launching a number of products, most of them to make it easy for our customers to access the financial system, and not only to our customers, but also to Kenyans at large. In terms of partnerships, we are aware today in society you cannot win by walking alone. If you want to walk far, if you want to scale, you have to have partners. Partners who shares the same vision with you. There are some partnerships we are working on, not only within the country, but also beyond. And I'm sure even as we continue our journey of listing, we'll be coming back to the market and probably giving you a lot of information on what you're working on as they get ready to be released into the market. Thank you.
Thank you, CFO. Thank you for that. And even just painting the way forward, just beyond listing, what strategic partnerships are there, and also what we plan to do. Thank you for that. Ladies and gentlemen, I know we have a flurry of questions here, but what I want to encourage is that immediately after this, most of our leadership and also the board and the senior management will still be around, so you can feel free to engage, but we can't just let you go without probably having some final remarks, and I would want to specifically invite some final remarks from our MD and CEO. And then after that, we'll have also final remarks from our chairman. Nancy.
All right, thank you so much, JK. I think my final remarks are just to reiterate what I said, that Family Bank is strategically positioned for the next phase of growth. The kind of achievement that we have received this far, and we really appreciate the positive comments, the congratulatory messages that are coming through. This is a testament that Family Bank is going to the next phase of growth, and we are encouraging all of us to come and join this great family of Family Bank. Our commitment as management is to make sure that we run this organization in the most efficient way so that we can return value to every stakeholder in this organization, including our staff, because they are very critical players in this. So our promise is that you're going to execute the strategy that you have come up with, and you're going to make sure that this bank gets to the next level and returns value to each and every stakeholder. So Family Bank is the place to be going forward. Asante sana.
Thank you, Nancy. The promise there is Family Bank is the place to be, and indeed we are prepared for the next phase of growth. Chairman, over to you.
Thank you. And a follow through from where the CEO has stopped. As we execute this plan, we have a board which is absolutely committed to good governance. Now that board will ensure that there is transparency, and that as we move this journey, we know we are getting into listing with more visibility in the public arena. We are going to ensure that we communicate on a regular basis, particularly to you, our key stakeholders. We are going to also ensure that there is strict adherence to regulatory requirements. And we believe that with good partners, which the CFO has talked about, the sky is the limit. But finally, let me thank you all, because this is a wonderful turnout. Thank you very much.
Thank you, Chairman. Thank you, Chairman. Indeed, thank you, and thank you for that promise coming from the board, on behalf of the board, and that reiteration that we are keen on governance, and even the promise that you have given to all our partners, customers, shareholders, and everyone who is keen and watching Family Bank. Ladies and gentlemen, let's appreciate this panel for fielding some of the questions. And indeed, as we keep saying, this conversation continues. The flurry of questions that have come through, we shall continue to look at how to get back to you in terms of the questions that have been raised through our social handles and social platforms, but also, especially for the customers and also stakeholders who are watching us online and following on the live feed, we will also have enough forums through which we can be sure to get back to you and probably even address some of the questions that have been raised. But we also continue to thank you for the flurry of congratulatory messages that have come in for the performance. We truly do thank you. And we recognize that this would not have been possible without the participation of each and every one of us. Ladies and gentlemen, allow me, in the interest of aligning with our program, we had indicated that we shall be finishing around this time. And so, in keeping with that, allow me to just thank you by way of putting in a vote of thanks to each and every one of us here. And on behalf of Family Bank, I extend indeed our sincere gratitude to each one of you for joining us at the Quarter 3 2025 investor briefing. To our board led by our chairman, thank you for your stewardship. And to our CEO and CFO and the entire ExCo team, thank you for your clarity and transparency in today's presentations. To our shareholders, analysts, regulators, partners, the media, and all stakeholders, your engagement, your questions, and your confidence in Family Bank continues to inspire our ambition and our performance. We appreciate your time this morning and your continued partnership as we work together to deliver sustainable growth and value. As we conclude, we leave you indeed with the assurance that Family Bank remains committed to excellence, transparency, and sustainable growth. Quarter after quarter, and of course, year after year. Ladies and gentlemen, we really want to thank you for your time, for your participation, and even for being with us. And I just want to mention that this is the end of our program, but indeed, the conversations continue. Please, as we were encouraged, get to know the person sitting next to you, get to make an acquaintance, and get to compare notes with our industry colleagues. I will now usher us into the next item, which is networking, and of course, media interviews for the teams that are going to schedule to do that. May God bless you. Asanteni sana.
Education is the foundation of our future. At Family Bank, we believe in empowering schools to thrive. Introducing the Inua Shule loans designed to finance your school's growth. With our Inua Shule school financing facility, you can access financing as much as your school needs. From classrooms to libraries, ensure your students have access to safe water and sanitation with our WASH financing. For your school buses, our asset financing covers 110% of the cost for brand new vehicles, inclusive of tracking and comprehensive insurance cover. Expanding to accommodate junior secondary school, we've got you covered with up to 90% financing. Welcome home to Family Bank, your preferred bank for Biashara. Education is the foundation of our future. At Family Bank, we believe in empowering schools to thrive. Introducing the Inua Shule loans designed to finance your school's growth. With our Inua Shule school financing facility, you can access financing as much as your school needs. From classrooms to libraries, ensure your students have access to safe water and sanitation with our WASH financing. For your school buses, our asset financing covers 110% of the cost for brand new vehicles, inclusive of tracking and comprehensive insurance cover. Expanding to accommodate junior secondary school, we've got you covered with up to 90% financing. Welcome home to Family Bank, your preferred bank.
Welcome to the celebration of a remarkable journey. 40 years of Family Bank of Kenya. From humble beginnings to becoming a banking giant, Family Bank has grown alongside the nation, empowering individuals, businesses, and communities. Let's explore the significant milestones that have shaped our legacy.